Good afternoon, everyone. Today, we will be discussing Ivana Halave's case study. Objectives: identify business and non-business transactions, enumerate the types of business documents, recite the rules of debit and credit, and apply this in simple cases. You are assigned to certain questions and you need to read the questions and give and illustrate your tentative answers to the aforementioned issues as truthful as possible. So let us start with our discussion. Problem 1. Suppose that Halave used her own maintenance crew to build an additional wing on her existing facility. What would be the proper accounting treatment of the following items?
Architect's fees. Halave wants to build another wing to her present facility with the help of her own maintenance crew, which means that they will construct a valuable asset that will be part of the company's economic resources. As we all know, an architect's job is to plan, create, and implement building designs, which is a vital aspect of a business. They are a component of the process of creating a location where you might want to start a business. To explain from the point of view of the three accounting elements, assets, liabilities, and owner's equity, the construction of the additional wing to Halave's facility will become an asset. As they will be rendering a business, architects may have a service revenue or professional fees, or they may have a wage expense for their services rendered to Halave's company.
Cash discount. Cash discounts earned from prompt payment on materials purchased for construction. It is to record a payment from the buyer to the seller that involves a cash discount. Now let me elaborate that further. Basically, you debit the cash account for the amount paid and debit a sales discount expense for the account for the amount of the discount and credit the account receivable account for the full amount of the invoice being paid.
Interest. Interest on money borrowed to finance construction. Halave should capitalize the interest on money borrowed to finance construction.
The cost of mistakes made during construction. It can't be counted as it since he didn't take advantage of it that way. Then it seems like who are the construction workers who are responsible since they made a mistake. They should be charged by their company and Halabi has the right not to pay them for what they used when they made mistakes.
Maintenance. The overhead costs of maintenance department that include supervision, depreciation on buildings and equipment of maintenance department shops, heat, light, and power for these shops, allocations of costs for such items as the cafeteria, medical office, and personal department. Repairs and maintenance are expenses a business incurs to restore an asset to a previous operating condition or to keep an asset in its current operating condition. They are distinct from capital expenses used to purchase the asset. Capital expenditures are costs that a company incurs to purchase an asset, extend its life, or increase its capacity for efficiency. Repairs and maintenance expenses only maintain an asset's life or current condition. The distinction is generally clear, although there are times when a judgment call is needed for a particular expense. The cost of insurance during construction and the cost of damages or losses on any injuries or losses not covered by insurance. When a business suffers a loss that is covered by an insurance policy, it recognizes a gain in the amount of the insurance proceeds received. The most reasonable approach to recording these proceeds is to wait until they have been received by the company. By doing so, there is no risk of recording a gain related to a payment that is never received. Problem number 2. Suppose Halave purchased a new machine. It is clear that the invoice price of the new machine should be capitalized, and it also seems reasonable to capitalize the transportation cost to bring the machine to the facility.
The new machine is heavier than the old machine it replaced. Consequently, the foundation under the machine has to be strengthened by the installation of additional steel beams. Should this cost be charged to the building, added to the cost of machine, or expensed? Why? Corporate capitalized costs are items of property, plant, and equipment. If Halabi brought a machine, the cost would not be expensed but would be capitalized as fixed asset on the balance sheet. This cost of an item is allocated to the cost of an asset as opposed to being an expense if Halabi expect to consume the item over a long period of time rather than being expense. The cost of the item or fixed assets is capitalized or monetized or depreciated over its useful life.
The installation of the machine took longer and was more costly than anticipated. In addition to time spent by the regular maintenance crew on installation, it became necessary to hire an outside engineer to assist in the installation and in working out the bugs to get the machine running properly. His costs included not only his fee but also his transportation, hotel expense, and meals. Moreover, the foreman of the department and the plant superintendent both spent a considerable amount of time assisting in the installation work. Before the new machine was working properly, a large amount of material had been spoiled during trial runs. How should all of these costs be treated and why? All of these costs must be treated equally because the maintenance crew, foreman, plant superintendent, and all of the other employees who help Halave's company install the equipment are underpaid. They have their own company which is supervised by Halave. The engineer should be the only one compensated. Under their own company's salary range structure, they have their own salary requirements. It should be Halave as the company's owner and workers such as the maintenance crew, foreman, and plant superintendent are employed to Halave's company, and they have costs to pay to the outside engineer that their company hired for machine installation.
It was it was necessary to pay a state sales it was necessary to pay a state sales on tax on purchasing the machine. Is this part of of the machine's cost? Why? Yes, all expenditures directly related to the purchase or construction of the preparation for its planned usage are included in the cost. Freight, sales tax, transportation, and all installation are all costs that should be capitalized.
In connection with payment for the new machine, the machine manufacturer was willing to accept the Halave's old machine as partial payment. The amount allowed as a trade-in was larger than the depreciated value at which the old machine was being carried in the books of the Halave's company. Should the difference have been treated as a reduction in the cost of the new machine or a gain on disposal of the old one, and why? It is gain on disposal of the old one. Since Halave is not going to use the old machine, might as well as trade it with in connection with the payment for the new machine. The money Halave invested and as an asset in that old machine benefit him and the company because the amount allowed in the trade is a large sum of money that will be deducted to the new machine, unlike if they sell it in a depreciated value. These are the members of Group 6 Archdiocese of Zamboanga. That's all for today. We hope you understand and learn from us. Bye!